Well, think for yourself. That's never bad advice. Sometimes Wall Street analysts have holds or sells on stocks that are worthy of your consideration. Markets reporter Sheila Dharmarajan has crunched some numbers. It's a Bloomberg exclusive analysis. So, Sheila, what did you find? We should just, I don't know, look for ourselves, right? Not always believe a consensus.
Well, that's definitely part of the story here. So what we did was we crunched these numbers, and I want to thank Justin Walters from Bespoke Investment Group because he did help out with this analysis. And what we did was we ranked every single stock in the S&P 500 according to their Bloomberg analyst rating. And then we looked at the stock performance since the beginning of July, so approximately the second leg of the rally. And what we found is that stocks in the bottom decile of analyst ratings, so these are stocks that had the worst analyst ratings, actually outperformed those stocks in the top decile, so stocks that had really strong analyst ratings. And Deirdre, you know, this outperformance was pretty significant. Stocks in the bottom decile was actually up 36% versus stocks in the top decile up only 22%.
So why is that? I mean, are analysts just wanting to be more and more conservative? They're afraid to take a chance on a high beta stock, or what?
You know, there's a lot of factors that play into this. Clearly, you know, individual companies and, you know, their plans obviously have a big role in this. But I talked to Joe Saluzzi. He's from Temis Trading, and he actually made a very interesting point. He said when you look at who's trading in the market today, he said you're seeing more and more momentum traders. So these are traders who are only focused on short-term price action. They're not really worried about the company fundamentals. Now, when you tie that to analyst ratings, what that means is companies with lower analyst ratings usually have a higher risk profile. Higher risk profile means more volatility, and more volatility means the potential for more price appreciation. So as the overall market has rallied, these companies that have a higher volatility around their ratings are actually outperforming. And you know, another potential that could be going on here is the contrarian bet. When an analyst puts a sell rating on a stock, this valuation is beaten down, the price is beaten down. So if investors actually have a contrarian point of view about it, it could be a very interesting time to buy. And, you know, I want to say we actually did call several of the companies that did have lower ratings who were in that bottom decile to try and get their perspective on analyst ratings, and we couldn't get a comment from them.
All right, no comment, and think for yourself, Eric. Those are the two key takeaway points. Sheila, thanks very much. Sheila Dharmarajan.